Well, if you're a manufacturer, there are hundreds of tax credits available to you, and chances are you're not taking any of them. Now, the pandemic introduced many businesses to the concept of tax incentives. We saw pop up programs like ERC and PPP. But unlike these pop up programs, the tax credits we're going to talk about today go all the way back to the 1930s. In fact, most of them are a permanent part of our tax code. And over the next few minutes, we're going to cover a few things like what types of programs are available for manufacturers, how much can a manufacturer get each year, and most importantly, why are these credits typically only taken by the largest companies in America when you are the type of business that actually needs them? My name is Ryan Maddock. I was raised in Michigan and right in the middle of the manufacturing boom. And over the last 23 years, I've been helping manufacturers get tax credits. Now, during that time, I've helped our clients find $37 billion, and we have zero IRS disallowances. Now, best of all, the credits that we're going to take a look at today are a permanent part of the tax code. What that means is not only can we help you get credits every single year, but we can actually go back in time the last few years and get those for you as well. Now, today I'm going to talk about four programs. Two of them are payroll based programs. You're going to qualify for these simply because you have employees in the type of work they do. The other two are property based. You're going to get these because maybe you either own a commercial property or you have personal property in your facilities to help you perform the work you do. Now, we're going to start out with those payroll tax credits. And for that, I want to introduce in my co host, Kendra. Let's start out by talking about what types of payroll credits are typically available for manufacturers.
Well, Ryan, there's many, but I think the first one that we should talk about is the R&D tax credit because we're manufacturers here, right? Basically, to begin with, it's been around since 81. It was made permanent in 2015, which was ma- amazing for all of us. It's offered to companies who create or improve a product or process in the course of their business. It is amazing because it's a dollar for dollar tax reduction, and there's no limit to how much you can claim each year. And if you're not able to use the credit, you can still carry it forward for up to 20 years. So, depending on your company's size and the types of activities that you perform, a typical benefit can range anywhere from 50,000 up to 5 million. And an interesting fact about the R&D tax credit is that over 42% of the claims that are being processed today, like last year and currently, they're being claimed by businesses that have less than 5 million in annual revenue. So those are everyday manufacturers, just like you guys all on this call today.
So, Kendra, one of the things is this is an annual program. And with it
Yes.
being a payroll tax credit, it doesn't really matter so much what you do as a manufacturer. It's about the activities that your employees perform. So, what I want to look at now are some of the activities, and we'll show some more in a minute. But, Kendra, what are some of the activities that employees would perform that would make someone qualify for the R&D tax credit?
So those ones that you see on the screen right now, those are foundational to the R&D tax credit. We're talking about manufacturing, obviously, fabrication, engineering, design, prototyping. These are those bases that the R&D tax credit was built on, and most manufacturers do all of these.
Yeah. And I want you to understand not all activities are created equal. So, you're going to get a different tax credit amount per employee that you have. And the
Right.
credits, the examples we just gave, those are some of the more basic ones. You might have 40, 50 employees that do those activities. You might only have a few that do these more technical activities, but you could actually make more money on some of these because they're more technical in nature.
Absolutely, Ryan. And we're talking about developing a new product or process, new concepts or technologies, testing, QA, software development or improvement, developing tools, molds, dyes. I mean, even all the way down to when you're applying for a patent, that individual in your office who's doing that paperwork, the administrative paperwork for that patent, that person actually qualifies for the R&D tax credit.
Yeah. In fact, I'll give you an example. Since 2015, when they broadened this program, we
Yes.
as a company, we take the R&D tax credit every single year
And we're not
because
a manufacturer.
no, but some of our staff perform some of these activities. So it doesn't really matter if you have the employment code that you're a manufacturer. What really matters is, do you have any employees that do any of these activities? Now, in a
Mhm.
little bit, we'll show you how to take advantage of this program and even how much you might qualify for. But first, Kendra, I want to look at one other program that we tend to notice manufacturers qualify for that's payroll based.
Yep, and that would be WOTC, or the Work Opportunity Tax Credit. I'm sure most everybody on this call has heard of, or they're slightly familiar with WOTC. It was first introduced back in 1996, and in the past, it was notoriously difficult to claim. But you really need to be working with someone who has a solid system to claim it, which is how we process our claims. It's a non refundable tax credit, and it's gained by hiring from specific target groups. And the credit averages about 2,400, but it can be up to 9,600. And I think there's something important to know about WOTC is that no matter whether you decide to take it or you decide not to look at it, 22% of your new hires every single year will automatically qualify. That's the national average. So if you're walking away and deciding, nah, I don't want to look at it, it's too hard, I've looked at it in the past, know that you're leaving at least 22% of your new hires right on the table. And there's no limit to the number of people that you can hire from these groups. And there's something that's interesting about your industry as manufacturers. You are a higher qualifier
Yeah.
for this tax credit because you have a naturally higher turnover with your employees.
Yeah. So, and Kendra, there's some interesting you said there is that if you don't take it, it's just going to waste. And that would be true of
Mhm.
the R&D credit. It's true of the WOTC credit.
You're just
It's
leaving it
true
on
of
the table.
everything. It's all money. And for most even a small manufacturer, you're talking hundreds of thousands of dollars that, some of it would come in the form of a physical check from the
Yes,
IRS that you're just
absolutely.
leaving on the table. I wish we could go through all of them. There are hundreds of programs available for manufacturers. That's
There's too
two
many.
examples. But let's switch over to the property side for a minute. So that's what you'd get as an employer. But on the property side, and when I say property, this is what I mean. You either own your facility that you're operating out of, or you have personal property inside of that facility. Kendra, let's do the same thing. Let's give two examples of programs that a manufacturer would typically qualify for on the facility or the property side.
Sure, Ryan. I think first, I would like to take a look at cost segregation because most manufacturers honestly are failing to take advantage of cost segregation. I don't know if it's because of not really understanding it, but basically, when you're utilizing cost segregation, you're taking those components of your building and you're depreciating them in a quicker timeline, the appropriate timeline. And by doing this and doing it through a cost segregation study, you're able to reduce your tax liability, and that puts cash flow right back into your pocket. And there's no other way to look at it. This is a great strategy, and everyone who owns or has renovated commercial property has to be taking a look at it.
Yeah, I mean, if you have a manufacturing facility or multiple plants there, and maybe you have $2, $3 million,
Mhm.
you easily have 300 to $500,000 in benefit just sitting there. And
Yeah,
and like I mentioned earlier, I think a lot of businesses got started out in PPP and ERC or where they dipped their toe in the water. The thing that you have to understand is that there are so many other programs available for everybody. So this is another example that manufacturers should be doing. Now, once we have that cost seg study, the last example I want to give you is property tax. Now, most of you manufacturers are overpaying on property tax. In fact, we find that 45% of the manufacturers that we encounter are overpaying on property tax. So what we do is we take that cost segregation study that Kendra just talked about and we look at it, and that breaks down every component of your building. And then we go back to your local municipality with that report and we say, hey, look, we have a federally accepted report here that shows the breakdown of this facility. We want to use these line items and these values to reassess the property taxes. That simple process right there is going to, on average, generate 10 to 20%, Kendra, in annual savings. This is yet
absolutely.
one more program that is every single year that you're going to take advantage of and have benefit from.
Right. And as a property owner, as most of us are, we have to do our due diligence and take a look at this. Some property values have really reduced in the last several years, and our municipalities aren't going to, out of the kindness of their heart,
No.
say, "Hey, we're overcharging you." So we have to do it ourselves. And the thing that's interesting is when we think about property tax bills, in our minds, for some reason, we think this is a fixed cost. Like we can't negotiate. There's no movement here, but that's simply not true. A good, solid review of your property tax assessments is often going to result, as Ryan said, in the identification of opportunities to lower that bill.
Yeah. So if you're a manufacturer, if you're an employer, if you own commercial property, if you've customized your space, chances are there's a tax incentive that's available to you. Now, all of this is bundled inside of our tax management system. Kendra, this is a platform that we originally developed to track WOTC claims for
Yeah.
our clients. And what we found was that most small businesses, mid-sized companies, they didn't have a big, robust HR platform. So they started using our WOTC platform to track and manage candidates, track employees, track their facilities. So what we did was we built a tool that helps your staff work more efficiently. And then in the background, everything you're doing that's in the normal course of your business, we're looking for tax credits constantly while you're doing things like storing resumes, storing employment documents, things like that. So we're able to go through and do that. And Kendra, in the background, we can identify credits every single day for a manufacturer year after year.
Yeah, Ryan, as manufacturers, you're increasingly focused on solutions that are faster, more cost effective, and this is all happening in a landscape that's increasingly automated by the day. And because of that, that innovation often translates into high qualification for tax credits. So you have to be using something, a system that's
Yeah.
going to be watching for changes in your structure. It's going to be watching different candidate and employment things that are coming your way, what your business is doing, so that you can truly qualify for what you are owed. And this
Yeah.
allows you to develop a strategic approach to claiming these tax credits.
So you're probably wondering, do I really qualify for anything? Or how much money could this actually be? I'm going to have you off the stream in about 60 seconds, but we can actually answer that question in real time right on the page you're on. You don't have to book an appointment. You don't have to go to a Zoom. You don't have to meet with someone. With just a few bits of information, we will calculate right now in real time what you qualify for. We'll search all of those programs. You can even choose which programs you want to participate in.
And we can confirm the information that you provide by you simply uploading a little bit of documentation right within the tax management system, so we can get out there and get those local, state, and federal programs for you. And that's everything right within the one system. And we're using information that you're providing us on your daily operations to consistently be looking for those credits on your behalf.
It only takes about 60 seconds to get started, but it doesn't stop there. We can offer something that no other provider can. Because we've been in business 23 years, we have physical presence in all 50 states. And if you'd like, you can either work in the tax management system or we can come meet you face to face.
So, Ryan, that's the system. And it really allows you to get in and get a look at what you qualify for. And then you decide. You decide on what you want to move forward with or what you don't want to move forward with. And you can start that today by simply taking a quick survey.
Well, the most important part is that you get started right now. Stop leaving money on the table. It only takes 60 seconds. There's no commitment required for you to find out what you qualify for. So there's nothing to wait for. Go do that. We look forward to working together. Thanks for joining us today.